Welcome. So, if you're looking at Bitcoin right now, things are confusing. The on-chain data is telling two completely opposite stories at the exact same time. One story hints that a massive rally is just around the corner, while the other is flashing some pretty serious warning signs. Today, we're going to dig into these conflicting signals and try to figure out what is really going on.
And that brings us to the big question, the one on every investor's mind. Are we looking at a launchpad for a brand new all-time high, or are we staring over the edge of a cliff, about to fall into a painful bear market? I mean, the stakes just couldn't be any higher.
So, here's our game plan for today. First, we're going to look at the really strong bullish case being made by Bitcoin's most dedicated holders. Then, we're going to flip the script and dive into the red flags popping up all over the blockchain. And finally, we'll put it all together to build a roadmap for what looks to be a very, very volatile December.
All right, let's start with the good news, the bull case. We're calling this the diamond hand signal, and the idea here is actually pretty simple. Even with all the wild price swings lately, Bitcoin's most loyal investors are making a very powerful, very bullish statement, not with their words, but with their actions.
So who are we talking about here? Well, they're known as long-term holders, or LTHs for short. These are the people, the wallets, that have held onto their Bitcoin for more than 6 months without selling a single bit. You can think of them as the resolute hands of the market. They're the ones who just don't flinch.
And here's why that is such a big deal right now. For the first time since way back in April, the total supply of Bitcoin held by these long-term players is actually going up. This is huge. It suggests that the HODL mentality, that patient, long-term strategy, might be becoming the main force in the market once again.
And you know, history gives us a pretty powerful parallel here. Just look at this timeline. Back in April, we saw the supply held by these long-term holders start to tick up. And what happened right after that? Boom! Bitcoin went on that massive tear to new all-time highs. Then for a while, they started selling a bit. But now, we are seeing the very first little green shoots, the first uptick in their holdings since those April lows.
I mean, listen to how one analyst put it. The last time such a shift occurred, what followed was BTC's rally to new all-time highs. It's hard to find a historical signal that's much clearer than that.
Okay, but just as we're getting comfortable with that bullish idea, we have to flip the coin, because a whole bunch of other on-chain indicators are screaming a completely different and frankly, pretty bearish story. So let's take a look at the red flags that are popping up.
So here's the core of the bear argument. The way the market is behaving right now, it doesn't really look like a healthy bull market that's just taking a breather. Instead, it looks eerily similar to the beginning of the big downturn we saw back in 2022. That's a pretty chilling thought compared to what we just talked about.
And we can actually put a number on this weakness. This is CryptoQuant's Bull Score Index. It basically rolls up a bunch of different market health indicators into a single score. And right now, it's sitting between 20 and 30. To give you some context, that is deep in bearish territory. You really want to see this thing above 60 to feel bullish.
So why is that score so terrible? Well, it's because the weakness is basically everywhere you look. Key indicators are flashing red all over the dashboard. Valuation metrics suggest the price might be overcooked. The actual activity on the network is slowing down, there's less buying power from stablecoins ready to jump in, and overall demand growth, it's just fizzling out.
You can also see this lack of conviction in the momentum indicators. The RSI, which tells you how strong the price is moving, is just kind of sitting at neutral. The Trican money flow is negative, which means more money is actually flowing out of Bitcoin than in, and the MACD, another big momentum gauge, is just looking really weak. The bottom line here is that this recent little price bounce doesn't seem to have any real power behind it.
So what on earth do you do? We've got this powerful long-term bull signal crashing head-on with some seriously weak short-term data. It's a classic standoff. So let's try to build a practical roadmap for how to think about what could be an incredibly volatile December.
Now here's a really interesting pattern that a trader named Dan Crypto Trades pointed out. He calls it the 12-day rule. Get this, in about 80% of the months this year, Bitcoin has set its high point or its low point for the entire month within the first 12 days. What that tells us is that the next week or two are absolutely critical for setting the tone for all of December.
And what about that famous Santa rally we always hear about? Well, history says don't count your chickens. December is a total wild card. Yeah, the average return is a little positive, but the median return is actually negative. The real takeaway here isn't about direction, it's about volatility. December has seen monster gains over 40% and devastating losses over 30%. It's completely unpredictable.
So with all that in mind, here is a tactical map of the battlefield right now. The bulls absolutely need to break through that resistance in the low $93,000, which they've already tried and failed to do. A key level that traders have their eyes glued to is a technical level around $83,381. And the absolute line in the sand, the critical support that the bulls have to defend, is that previous low down near $80,714. The fight is happening right here, right now. And just to make things even more chaotic, we've got a few factors that can pour gasoline on this fire. It's the end of the year, right? So you have big funds rebalancing their portfolios, you have people selling to lock in tax losses, and all this can happen when liquidity is thin, meaning there are fewer buyers and sellers, which just magnifies every single price move. Okay, let's bring this all home for the final takeaway. What we are seeing right now is a market that's defined by two incredibly powerful, totally opposing forces that are locked in a classic tug-of-war. On one side of the rope, you've got the bulls, right? The diamond hands are back to buying. That's a pattern that came right before the last huge rally. Their long-term conviction is rock solid. But on the other side, you've got the bears, yanking back with all their might, pointing to weak on-chain data and momentum that's just totally fading. It is a fundamental split, right down the middle of the market.
And that leaves us with this one final provocative question. When you have the deep, unwavering conviction of long-term holders fighting against some really significant short-term market weakness, what are we actually looking at? Is the market quietly building a launch pad for the next explosive rally, or is it busy digging its own grave for a much, much deeper fall?